Hey there, everyone. Dr. Stock, happy Super Bowl Sunday to you. Let me know down in the comments, are you rooting for the Eagles or the Chiefs? If you're rooting for the Eagles, just put down Go Birds. If you're rooting for the Chiefs, say Go Chiefs. Like I said, down in the comments, go ahead and do that. And if you're not watching at all, just, you know what? Do me a favor. Regardless if you're watching the Super Bowl or not, hit the thumbs up button to like this video. Also, if you haven't subscribed, please subscribe to this video. And I'm going to move quickly on from there. In this video, we're going to talk about the CPI, some of the changes affecting the CPI, why the numbers had been revised for us, and then also moving into that, what's going to happen to the markets as a result of the movements with the CPI when it gets reported, and also my expectations for the CPI based on the consensus that we see, and also based on history. I have that historical analysis available over at my Patreon. If you want to be part of that community, you can find that link down in the description. Go down, click, sign up. Be a member of the community, get access to the research notes and the Patreon exclusive videos that I put out. With that said, I'm going to move on. I'm Dr. Stock, Doctor of Education. Let's get right into it. All right, so I think a really good place to start is looking at the CPI. This is the one that came out on January 12th, and they did not update the numbers in here. They have, though. I'm going to share that with you in a moment, so just watch for it. The big thing that you want to know is that for all urban consumers, the CPI decreased 0.1%, so that's a negative 0.1 month over month. Now, that did change. I want to be clear about that when they went through and did the recalibration of the weights affecting the CPI, that is something that did change for us. It actually went up to positive 0.1. I'll share that on the next screen. And then also when you go the index for all items less food and energy, an increase of 0.3, that also changed. So we want to pay attention to that on the next one as well. So here in this one, we have one called latest numbers. And right here is the new print for December for all items. So it did move up 0.2% month over month when they put in those new seasonal adjustment weights. So that's different for us. And then something right here, well, is the 0.4% for all items less food and energy. And so there is some significance to both of those numbers. Now, they all have already happened. So the markets, and this came out on February the 10th, these revisions came out. So the market was open. These effects were already priced in from these, and not a whole lot happened with it. You know, maybe this was part of what caused us to have not as much strength when we looked at the markets on Friday after consumer sentiment came out. Honestly, I think it was more the inflation expectations over the next year going higher that I think was the biggest negative coming out of consumer sentiment. Otherwise, consumer sentiment looked pretty good. It did mention stuff about slowdown. But back to the CPI, because that's what I'm here to tell you about. So the significance to this number, this 0.1%, we went from decrease of 0.1%, which means that inflation came down a little. We actually had deflation in December, and there was a lot of excitement over that. And it turns out it wasn't deflation, it was disinflation. In other words, we still had inflation, it just slowed down. And then when we look at what we have here for the core CPI of this 0.4%, that's actually an increase from the 0.3%. So 0.3%, when you stretch it out across the entire year, it comes out to be about 3.6% annualized, just for simple math. And then that's not great because the Fed's still looking for that 2% target. So when you take the 0.4% and annualize, it's 4.8%, and that's, well, worse for us. So the significance to that is that the consensus that we have coming out for January, and January CPI is released on Valentine's Day. Remember, it's always a month behind. So it's February. We look back at January now with the CPI that comes out. For all items, we're looking at 0.4% for consensus. Now, that was 0.5 for consensus, which was a huge jump up from the decrease of 0.1 that we originally had up to the 0.5% consensus. Now it's only 0.4% month over month consensus. And how many more times can I say consensus? That delta between the two month over month values, we went from 0.6, which was incredible. That only happens about 2% of the time that you have that big of a jump in month over the history of the CPI, which is from 1947 to 1922. With the seasonal adjustments that we have, instead of being a 0.6% difference, now it's only a 0.3% difference, which is more of a one standard deviation event. And I believe, if I'm remembering the numbers correctly, I believe this is more like an 8 to 10% event. So it happens 8 to 10% of the time that you have a 0.3% change in the month over month from one month to the next month. And that would speak to the smoothness of the graph if we were to look at a graph right now. The biggest impact that we're going to see from that, now mind you, the consensus is already there. That's already priced into the market, is that consensus. So if we come in at that value, we could still see the markets move because, there could be maybe some disbelief or some holding of the breath of the markets, if you will. But honestly, I think what we're waiting to see is if we surprise to the downside and inflation comes in cooler than expected, or if we come into the high side and inflation comes in hotter than expected. The Fed, when Jerome Powell came out and spoke after the last meeting, said that inflation is moderating. However, it's something they expect to see stick around a little bit higher for a little bit longer, and that they're prepared to do multiple rate hikes in order to make sure that inflation doesn't come roaring back on us. So that is also important to keep in mind. So we might see that print of 0.4%, and that's not going to be great because, again, it annualizes poorly. It's not the sort of inflation rate that we want. If we can come in under consensus, 0.3, the market, I think, is going to respond positively to that. Now, Monday could be a very fear-filled day, and I'll get to the markets in a moment. I know, but Monday could be a fear-filled day because what if it's higher? Oh my gosh, we don't know what this is going to do. So if I had to put a guess as to what's going to happen in the markets on Monday, I think it's red regardless as we kind of mull over and worry what's going to happen in the CPI on Tuesday. So that surprise to the downside, 0.3, markets go green on Tuesday. 0.2, markets go really, really green on Tuesday. And 0.1, markets, I think, would start to go nuts by that point on Tuesday to have such a low print for inflation for something that's expected to be 0.4% month over month consensus. For core, it's still 0.4. And I still say the same thing for that one. If we have those surprises to the downside, that, especially core, because that's less food and energy, so you don't have that volatility there, that one is really going to be the one to look at that's really going to determine just how green we see coming out of that. So 0.3, 0.2, 0.1, I don't think that we're going to see 0 or any of that, as a matter of fact. I think 0.3 or 0.2, you don't have as much movement with the core. By not as volatile, you don't get as big of price swings. There's not as wide a spread for the typical values that you would have for that. So 0.3 or 0.2, if we're going to surprise to the downside at all, I would be very, 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 very surprised to see it go any lower than that. To the upside, however, or even, 0.4, 0.5, and then 0.6 would be the other one. Now, core doesn't move that quickly. So if we're going to surprise in either direction, most likely, I would say it'd be within that 0.1. 0.2 would be incredibly good to the downside, 0.2 instead of 0.4. Incredibly not good, bad for us to the upside, because that would annualize to 7.2%. We'd definitely be moving in the wrong direction to go up to like 0.6. Where did these adjustments come in? I'll give my take on this in just a moment. Hang around with me. I promise I will. So here, this is on the BLS website itself, and they talk about on February the 10th, it's in this line right here, that those adjustments were made. So October went from 0.4 to 0.5, November went from 0.1 to 0.2, and December, importantly, went from negative 0.1 to positive 0.1. That changes the game for us just a little bit to see those adjustments come in. And another question people had, they used to use biennial revision of consumer expenditure weights. They've recently switched. So in this line, the important thing, you don't need to know what all of it means, but you can see they used 2019 and 2020 to do that. And they also used part of 2021. This time for the revision, it was an annual instead of biennial revision. So they based it off just 1 year, the 2021 year, because 2020 itself, because the pandemic had such crazy out of the ordinary numbers, they figured that this was the better thing to go with. And there is a lot of research and documentation that goes back behind this. It's not just like, well, let's skip 2020. They researched it, they tested it out, they checked it, they compared it to other seasonal adjustments and the different weightings that they had, and this was what they decided was the best course of action to go with. So it also used part of 2022, and then finally that got updated February 10th, 2023. So that's what happened with it. Looking at 2021 instead of 2020 and 2021, and then part of 2022. Now it's just 2021 and part of 2022. So they skipped the pandemic year, and it was probably wise that they did that. So I want to take just a quick look at the markets, and then I'll give my take on what I expect to happen when the CPI comes out on Tuesday for whatever it's worth. So here we're looking at the SPY, and right now we're sitting at a nice area of resistance. So Monday opening red, it could most definitely happen. If the market expects, or I should say if the market is fearful, uncertain, or doubtful at all about what's going to happen on Tuesday, and I anticipate that it will, we could most definitely see that come downward. And I don't think it's going to be down a lot. I guess it depends on how afraid the market is. If it does come down, I think we got room for about 2% down at the very worst on Monday. I think skepticism is going to be part of what keeps it from going down that low. Honestly, I think if we're red, it's between 0 and 1% down from where it's currently at for Monday. So let's talk about Tuesday then. So assuming Monday is red, or even if we stay right where we're at on Monday, I still think that we have 2% to the downside on this, unless we get a really, really horrible reading, in which case that would send us down to possibly the 200-day, which is down to 391. So that'd be 4% drop in a single day. I don't think it's going to be that bad, but I think it will be red on Tuesday as well. We'll have to watch and see what Monday holds for us and what Tuesday holds for us. But if we get prints that are 0.5, I think we have about 2% to drop down from where we're at. If we get 0.6, well, I think that would be a little bit more calamitous to us. And I should say that's for CPI core. I don't think we're going to get something that's that high. I think we either come at consensus or we come in at that 0.5 for core to the downside. Maybe we'll see it. Maybe we won't see it. We're gonna, Tuesday's we're gonna have to wait for that to come out and say. And I've been wrong before. I don't like it because I have my trade set up in accordance with being short or going against the markets. As a matter of fact, going against the Nasdaq. I'll show the cues here. This last little candle that we see here, a lot of indecision in the market. Nasdaq was the only day that was the only index out of the Dow Jones, S&P, and the Nasdaq. So out of the top three, that was the only one that closed in red on Friday. And that's the one that stands to move the greatest amount Monday, Tuesday. So we're going to have to watch that as that plays out for us and see what we just have, or see what happens going on from there. So let's say instead of surprising to the downside, let's say that instead of surprising to the upside on inflation, so down on the markets, let's say that we moved up. Instead, we have a decent amount of room in the Nasdaq. We could have a really, really strong surprise. We could see 3 to 4% upward in the Nasdaq from where we're at right now. So for the SPY, surprising to the upside there, I think could give us about 2% up from Friday's close. So that would be up about 416, puts us right at the top, almost about where we peaked at before, and then also across the top of these as well. I don't think that we see this last peak that we had back here in August. I don't think that we rallied that high or that hard unless we would have to have a really incredible print in order for that to take place. I don't think we get that sort of euphoria. I don't think that we see that price anytime soon. So we're going to have to watch and see what happens on Tuesday when that comes out. So let me wrap this up. Consensus, 0.4% for all items and for core for the month of January. And we see that coming out on Tuesday, February the 14th. I expect that we're going to be a little bit above those values. We'll have to watch and see if that happens. If it does, the market drops like I expect. As a matter of fact, if it comes in at consensus, the market could still drop on us. So we'll have to watch for that to happen. Really, if it comes in at consensus, it's a coin flip because there's just so much that's at play. There's not just the CPI. You can't just go off a single measure and predict the movements of the markets. However, if there's a big enough surprise in either direction, that report does have the power to move the markets relative to everything else that's out there. So those are the thoughts that I have. Thank you guys for watching this video. I really appreciate it. If you like what I have to say and you would like to see more of what I have to offer, check out that link for the Patreon down in the description. I would absolutely love to have you come over and be part of the community, interact with me in the Discord that's over there, get access to my research notes as I share them out. Like I said, that link is down in the description. Go ahead and click that, sign up, and we'll see you over there. Thank you guys for watching. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.